Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia and Nigel. Morning, guys.
Hi, good morning. We actually have lots to, watch out for today. I mean, global cues are good. There are a lot of big earnings coming through. So I think we have our hands full today.
Hands full. I mean, everything full. I mean, it's like, but the market for the last couple of days has been dithering. And the good thing is that this morning we have a bit of positive, handoff from Wall Street. So I think today will be a good test whether, there's something which is roiling the markets here in India. Things will move back on. It often happens that in weeks of F&O expiry, the Fin Nifty expiry is when it really started to show up. Markets dither, and especially at all-time highs, that kind of price action is not completely uncommon. So, as I said, because overnight cues are good, and the overnight cues are good because there is some visibility on this debt ceiling resolution. We had, U.S. President Biden, who basically came out with the Republican leaders and said that we will find a solution. Yeah, this debt ceiling business, I've not paid very much attention because it comes every year. It's like the boy who called wolf, and nothing comes off it. It goes to the brink and then it's resolved. This time we have visibility at least 5 or 6 days before that this is essentially going to come through. The S&P was up about 1.2%. The Nasdaq was up about 1.3%. The yields rose a little bit. The dollar index is something I want to point out too. It got to past the 103 levels and then it dipped a little bit, but it still was up 0.25%. We left off at 102.89. The dynamic is interesting. Data in the US is showing that that economy is doing much better than holding up much better than what many expected. On the other hand, the two other large group economic blocks, which is one is Europe and the other is China, growth is not so good. China especially. So the dollar, money is going into the dollar and the dollar is rising. Many are of the view that it will rise against emerging market currencies as well. Let's come to the market here in India. Nifty and Bank Nifty sold off yesterday, but in the last 30 or 40 minutes of trade, we did pull back. We closed off the lows. The small cap index ended about 0.6% higher. The mid caps also came up. The broader markets basically did much better as compared to the Nifty and the large caps. The question is, if this is just a pullback, what we've seen over the last couple of days within a broader uptrend, even now I would say, actually we've not corrected that much. To be fair, this seems to be the case, that this is just a pullback within what is a broadly uptrend, a broader uptrend. And I think today will be a good test case because you've got a positive global cues. Supports for the market lay at the 20-day moving average, which stands at 18,053. If you want to look at whether, short-term markets are turning from an uptrend to a downtrend, a 20-day moving average always comes in handy. That should not be broken on the downside. And closer to those levels, I think it would make sense to try and buy the dip. Even if you get a flat close slightly lower, that will be great. Bank Nifty's low yesterday, which is 43,446, becomes important. And it would be great if, if the uptrend is intact and this level holds. Even if there is a test, the level holds. Talking about financials and banks, SBI results, I think that will refocus attention on financials because, largest bank in the country, and what they say across, each of their verticals are equal or bigger than many individual entities, financial entities there. So you'll get a very broad-based picture of, and of course, outlook as well, how credit growth, deposit growth, etc., how that environment is really panning out. Financials, you need financials to participate for the Nifty index to do well as well. Sonia.
Absolutely. And, this morning looks like it's going to be a very strong start. But as you said, the market has been facing a bit of resistance at that 18,300 to 18,400 mark. Would be interesting to see if that gets taken out anytime soon. Big earnings today, I think that will be front and center for the market. There's SBI, there's ITC, there's Bata. There are also, a lot of other companies, United Spirits, Indigo, etc., coming out with their numbers. So we'll be tracking all of that very closely. For SBI, it's expected to be a good set actually this time. Good traction in loan growth and improvement in asset quality, best in class in the PSU banking space. So that will pretty much be the barometer, sentiment barometer for the way forward in that space. And for ITC, let's not forget it has been one of the strongest stocks this year. It's up almost 30% this year already and expected to be a strong showing this time. Mangalam was telling us that there is a growth of almost 12 to 13% in the cigarette business that, the street is expecting for ITC. So in that context, both these numbers could sort of, be the anchor in which the market sort of moves forward. Let's wait and watch. Good cues from across the globe. The Dow was up 400 points yesterday. And the House Speaker, Kevin McCarthy, said that he doesn't believe that the US will default on its debt. So perhaps those fears are receding as well. We will, of course, be tracking the markets very closely. In that context, there was hardly any flows yesterday. FIs net bought about 150 crores. DIs sold about 200 crores. And it was second straight day that the Nifty was under pressure. So do the dips get bought today? And once we start off in the green, what happens then? Can we get past that hurdle of 18,300, 18,400? Let's see. I think midday is when, a couple of these large numbers come through. And then perhaps the market could latch on to that.
Well, indeed, Sonia. Second half of the day belongs to SBI as well as ITC. But in the last couple of days, what we've seen is not significant shorting on the index. We've corrected a little bit. Even yesterday, we saw a little bit of a downtake. But that's because there's unwinding of positions both on the Nifty as well as on the Nifty Bank, close to around 7 to around 8% odd. Trade set up this morning. The crucial part is, will those call writers get stuck on the wrong side? It's the Nifty weekly expiry. And call writing has been done by gay abandon. It's been too easy in the last few days. Will those call writers get stuck, given that we're likely to see some green to kickstart trade? Very, very important. SBI, from around 1 p.m. or the PSU banking index as well as banking names, they'll be driven by what SBI delivers and what it has to say as well. And amidst all these positive global cues that we had overnight, the dollar index moving to around 103, that's getting a little bit of a worry. Hopefully, it stalls in its path out there. What do the FIs do? Well, they bought for the 15th straight session, which is good news, right? But it's the lowest inflow that we've seen in the last 15 sessions. Hopefully, they continue with their buying ways because you don't want that number to dip into the red. In the F&O market, well, they added close to 4,000 short contracts odd. The problem is, at higher levels, we'll see call writing. More than 1 lakh call contracts did get written even in yesterday's trading session. Now, a few days ago, we were talking about the PCR going to 1.34. And that's normally the upper end of the band. Now, post this small 200-point correction that we've seen and the kind of call writing that we've seen, the PCR has come down to around 0.83 odd. Remember, the lower end of the band is around 0.7 odd. And the call writing, just take a look at that. The 18,200 call writers, they're going to be in a bit of trouble today, provided, we don't get past that 18,250, because the 18,200 call, well, they are playing for that 18,250 odd level holding out. So the resistance zone becomes 18,250 to around 18,300. On the downside, I'm looking at yesterday's low. We bounced off 18,115. So that becomes a bit of a support for today's session itself on the Nifty. Let's pull those levels up. On the Nifty Bank as well, yesterday's low becomes a bit of a support. On the upside, closer to around 44,000 odd, that'll be a bit of a resistance zone. So we have our markers. SGX Nifty suggesting 30-40 point gap up. I'll tell you what, if you start more or less flattish, it's giving you a bit of an entry opportunity. But if you gap up 50-60 points, then the play could be over out there, because those that took long positions yesterday will look to book out. Maybe buying the intraday dip and hoping that SBI and ITC don't disappoint, then maybe it could be favorable. But that 18,115 is an important mark on the downside for the day's session itself.
All right, Nigel, we'll see how it goes. We've got a 40-odd point uptick is on the SGX Nifty at this point in time. Well, let's quickly tell you what's lined up in the first 30 minutes of the show. We get you updates from markets across the globe. Mark Matthews of Bank Julius Baer and Company will join in to discuss the global trade setup. Our research team will bring you CNBC-TV18 list of top 10 stocks of the day. At 8:30 this morning, we do a fundamental stock check. Deepan Mehta of Elixir Equities will join in for that.
Talk about the next 2.5 hours. So let's kick it off with some equity views coming in. Sunil Thirumalai is our guest for the day. He joins in from UBS. He says, while focusing on fundamentals and valuations, the upside is capped for Indian markets due to middling fundamentals outlook and high relative valuations. UBS is underweight on India amongst the emerging market universe. They continue to prefer banks given relatively cheaper valuations and benign asset quality outlook, while they are underweight on metals, real estate and consumer discretionaries.
Okay, let's get you some money market views as well. This is on the rupee. Parul Mittal Standard Chartered Bank says the dollar INR saw upward pressure on dollar strength and USD buying by PSU banks, though impact was partly offset by much better than expected April trade deficit data and renewed FPI equity flows. For next week, Parul expects the dollar INR to trade in the 82.1 to 82.75 to a dollar range, reserve building efforts by the RBI are likely to be the key forex drivers from here out.
Okay, and on the bonds, she says that the domestic bonds rallied last week despite a rise in the US rates due to improved domestic liquidity and the India's CPI cooling off. They expect the Indian benchmark 10-year trade in 6.9 to 7.1 range next week and will closely be watching the RBI steps on liquidity, dividend announcement due tomorrow, and any news on the monsoon front.
Well, we have a lot of stock-specific action for you, and we'll get to that in just a wee bit from now in our special Talk 10 segment. We are looking at Thermax, Honeywell Automation, Jindal Stainless, JK Tyre, Endurance Technologies, and Restaurant Brands Asia. Their stocks on the back of positive news flow. On the flip side, you have a couple of weak earnings that came out. REC, Whirlpool, Railtel Corp, and Vedant Fashion as well went to that fundraise.
Okay, well, those are all the stocks that we're going to watch out for. But investor sentiment got a boost overnight after leaders in Washington indicated that they are now moving forward on the debt ceiling talks. So that fear has receded. Let's listen into what the House Speaker, Kevin McCarthy, and President Joe Biden had to say on the debt ceiling negotiations.
I'm confident that we'll get the agreement on the budget, that America will not default. And every leader in the room understands the consequences if we fail to pay our bills. And it would be catastrophic for the American economy and the American people if we didn't pay our bills.
I think at the end of the day, we do not have a debt default. I think we finally got the president to agree to negotiate. That was probably difficult for him to say as president he would negotiate with somebody, but it's really what the old Joe Biden was good at. And now we've got an opportunity for him to be back to what he used to be able to do, and let's get the job done.
Okay, the U.S. debt crisis seems like it's coming to a resolution. And it's always the case, isn't it? It does get done. Mark Matthews of Bank Julius Baer and Company is now joining us with what he's making of things. Mark, it's been a while. Thank you very much for being on the program. Good morning. Equity flows into India. FI flows into India very, very strong. I think in May so far, we've seen a very large number, a couple of $1 billion. What's your sense? What's going on? Is India back on the radar, top of the list, or not really? Your sense?
It's not. So I don't know why that's happening. I have no problem with it. I've been bullish on India for a while. But the market in Asia, everybody's talking about Japan. And in yen terms, the Nikkei is up, I think, almost 18%. And in dollar terms, it's up in the mid-teens. So that's the market in Asia that people are interested in right now. Basically, it's a combination of Warren Buffett having visited the country last month and the idea that the Bank of Japan will be lifting their yield curve control, and that wages have grown the most since 1992. So India is not on the radar screen, and I'm delighted to hear that it is getting some inflows. I didn't know that.
It's actually been 14 days or 14, 15 days now that foreign investors have been buying into the Indian markets. Mark, good morning. What do you think what would it take for India to get back on the investors' radar? I mean, things are picking up, earnings are looking good, buying has come back. Then why are we lagging behind? Is it purely because of the valuation argument that some of these markets like Japan are looking attractive?
I don't know, but my sense is that people like Japan because it has these globally recognized brands like Sony, Nintendo, Toshiba. India doesn't really have that. So there's a comfort factor. It's a developed market. It's enormous. It's the third largest market in the world. And it has a very undervalued currency. So it all fits together right now. India, I think, unfortunately, is a little bit tarred by the emerging market brush and what has happened in China. And of course, we know there couldn't be two more different countries. But If you're on the other side of the world in New York or London, you don't know that. And you just think that emerging markets are risky. And case in point, look what happened to China.
Hi, Mark. Good morning. Mark, what about the debt ceiling? You're getting positive commentary overnight from Mr. McCarthy as well as from President Biden. Do you think that's going to be done? I mean, the markets were worried maybe unnecessarily because we see it on a year-to-year basis. That's the first part. And banking crisis, will it come about in the United States? Or do you think that regional bank issue is sorted, not too big to worry?
Yes, I think both are not issues that we should lose sleep over. I listened in on what Speaker McCarthy said in your interview, and I agree entirely that Joe Biden is very good at negotiating. That's what he built his career on. So he's decided to do it after he said he wouldn't do it with the Republicans. And so I think we will have a deal, and we always would have had a deal. We know that. And the worst case scenario is he would have invoked this archaic Amendment 14, which says that the U.S. shall never default on its debt. So anyway, yeah, I don't think the debt ceiling is an issue. And then with the banks, we have actually done a screen ourselves and identified 6 banks that do have weaknesses for one reason or another. They're not all the same reason. It could be they have a lot of commercial real estate exposure. It could be that their capital adequacy ratios are too low. Anyway, there's 6 of them, and only one of those has assets in excess of $100 billion. To put that in perspective, both Silicon Valley Bank and First Republic had assets in the mid 400 billions. So this is something that I don't think will become systemic, and I'm not saying it's going to be easy for the smaller banks because their deposit rates are still far lower than money market rates. So there will be probably a slow ebbing of deposits away from them, and they have lent a lot to commercial real estate. But we don't think that is a big enough problem to drag the entire economy into a recession, or certainly not the stock market, which of course seems to be much more focused on technology and artificial intelligence than worrying about commercial real estate.
Got it. Mark, the other thing is what the dollar is doing, right? It seems to be, there seems to be a sense building up that maybe the dollar has got a little bit more business on the upside. But the rupee has been remarkably well behaved against the dollar. Trade deficit numbers, strong FPI inflows are just 2 factors which I can cite. What is your sense? If the dollar were to rise, a few percentage points from here, will that mean trouble for Asian emerging markets? What's your sense?
Not trouble, but traditionally you're right in saying that the dollar, when it rises, has been a headwind for Asian markets because Asia tends to borrow a lot in dollars, and therefore the cost of that financing goes up. I wouldn't worry about it too much. Currencies are the hardest thing to call, and so I would have said the dollar should go down because they've finished raising their interest rates, whereas the Europeans are going to have to keep raising theirs. The Japanese are going to lift yield curve control. Purely based on that, I would have thought the dollar would go down, and now you can see the opposite's happening. So I don't know, maybe people just got too bearish on it. I wouldn't actually be too bearish on the dollar. I think it does seem to be bottoming out here, but I see no real reason why it should skyrocket higher either.
Okay, you want to leave us with, since you continue to be bullish on the Indian markets and optimistic here, you want to leave us with any preferences, any spaces that you like, banks, autos? Rate sensitives have been doing quite well. Do you think technology will come back on the radar?
Well, I'm going to be very lazy and say I agree with all 3. Banks, automotive, and IT. Why not? I mean, they all make sense. Artificial intelligence is going to be as big as the internet. And for sure, your IT companies will be just as much beneficiaries of those as the IT companies in the United States. The automotive, it's very clear, is going gangbusters in India, and there's so much room for more growth there. And banks are the heart of any economy, and the Indian economy, I think, will more than double in size over the next few years. So those all make sense.
Okay, all right, Mark, we leave it at that. Thanks a lot for joining in. So that's the global perspective. Bank Julius Baer saying that the US rarely defaults on its debt. So that doesn't seem to be a bit of a concern at the moment. But the market that everyone likes right now is Japan. And Japan, in any case, has been hitting 52-week highs. Let's slip into a quick break. On the other side, plenty of stocks to talk about. So don't go anywhere. Our entire research team will be with us bright and early this morning. Stay tuned. Okay, welcome back. Hope you're having a good morning so far. The bulls definitely look like they would be because of the SGX Nifty indicating that the start will be well in the green. But we've been dithering. The last 2 days, the market has closed at the low point. So let's see how today progresses. Lots of stocks on our radar. So let's get straight to it. Our research team is joining in. Abhishek is here first up to tell us about REC's performance and how that is shaped up. Abhishek, morning.
Morning, Sonia. So, REC, the business momentum is not aiding the PNL momentum. Gross NPA ratio has come in at 3.42%, which is the lowest in the last 21 quarters. Net NPA ratio of around 1% is the lowest in the last 29 quarters. Business momentum has been stronger. Disbursements up 138.5% YOY and about 24.6% sequentially. So, the loan growth momentum has been steady at around 13% YOY and about 5.8% sequentially. But take a look at the net interest margin and spreads. Both of them are at 20-quarter low or the lowest in last 5 years. The net interest income is down about 12.25% YOY and about 3.3% sequentially. Even in the previous quarter, that is Q3, the NII was down 12.5% YOY and 11% sequentially. So there is pressure on the net interest income for second quarter in a row. The PAT is up 31% on a YOY basis and about 4.3% sequentially, given the fact that OPEX or operating expenses on the lower side, and they continue to make provision right back, which is actually aiding the PAT momentum. Back to you.
All right, thanks a lot for that, Abhishek. Well, Vivek joins us to tell us about a couple of numbers that came post-market as Thermax as well as Honeywell Auto. Hi, Vivek. Morning.
Well, good morning. That's right. So Thermax has delivered a good set of results, strong growth, robust growth momentum, as well as good ordering activity seen. So revenues have jumped up almost 16% on a year-on-year basis. EBITDA is up almost 48%. And, the good part is margins have expanded by over 190 basis points. Profitability too is higher by around 52%. Now, what the company is saying is that the margins was mainly aided by stable prices across the commodities. So stable steel, chemical as well as commodity prices have aided the margins for the company this quarter. Also, they are saying that going forward, demand is being seen, from very strong government spend on infra as well as transportation. Order book is quite healthy at over 2,250 crore. Now, the company has also gone ahead and reorganized its business structure into 4 separate verticals. We'll quiz them more on that later. And, what Macquarie is saying is that, it's a better than expected execution aided by stronger than expected margin performance. Now, coming to Honeywell Automation, slightly mixed, but still a good set of numbers from the company this time around. Revenues higher by 27%. Margins too quite strong, almost 300 basis points improvement. Profitability higher by 54%. Now, what Nomura is saying is that the gross margin has recovered to 50%, and this particular number has been seen after a while in Honeywell Automation. Also, what they're saying is that the dividend payout has come in at almost 19% for FY23. So, again, a good set of numbers from Honeywell as well.
All right, thanks a lot for that, Vivek. Well, let's focus on Jindal Stainless. Remember, this is the first quarter that they're reporting as a consolidated entity. That's Hisar as well as Jindal Stainless as one entity. On the top line, there was no growth. That's because prices are much lower. And the operating profit was down by closer to 20% on a year-on-year basis. Now, we're looking at the margins, and there is some improvement on a sequential basis. And that's the reasoning why we're going with green on this one. For the India business, we have the volumes number, which were much higher. It was up by in double digits for the past quarter on a sequential basis. And there was some marginal improvement on the EBITDA per ton. That's the calculated number that I've put out. The net profit number, though, came down because of a weaker than expected operating profit on a year-on-year basis. Sequentially, there's still an improvement. And the net debt between both the entities, that's the standalone entity as well as subsidiaries, is nearly around 2,900 crores odd. But they're saying the peak debt goes to around 5,000 crores. We'll be joined by the management at around 10:30 a.m. today to get further clarity. But I expect the stock to open up mildly in the green. But Sonia, you're tracking a couple of auto ancillary names?
Absolutely. And the run has been pretty good this time. I mean, it's largely margin driven, right, for the auto ancillary names. I think that's something that you're seeing in Endurance Tech and JK Tyres as well. So I'm going with green for both these companies. Let me start with JK Tyres because as we know, the entire tyre pack has delivered this time around. JK Tyres, strong earnings, double-digit revenue growth is what you're seeing. The margins have gone up 340 basis points year on year, and the profits are up quite a bit compared to what we've seen last year. The India business is very strong. It's an 8.5% growth that JK Tyres has seen in the India business. The Mexican business, Tornel, has done well on the top line, but the EBIT is under a bit of pressure. So we'll, of course, chat with the management later on and find out more about that. Endurance Tech is the other one I'm watching. Over there as well, the Q4 revenue growth has been decent at 7.8%. Once again, it's a margin beat. EBITDA margins at 13.6% versus 12.9%. And the consolidated revenue growth in the full year has come in at 16.6%. So I'm going with green over there as well. Largely, the the auto ancillary space has delivered this time.
Okay, and we'll have the management of JK join us, right?
Yes.
A little later. JK Tyre management will be with us to talk about the numbers. More earnings from the fourth quarter, stocks and news. Surabhi standing by with that list. Surabhi, morning.
Morning. So let's start with RailTel first. It was a mixed set of numbers. The revenue was up 51%, but the margins were at a multi-quarter low. Margins came in at 14% versus 21% same time last year. The PAT was up 40%. Now, when you look at the internals, most of the revenue growth has come from the project services segment, where the revenue was up 132%. In the telecom segment, the revenue was up only 5% and the margin compression of 400 basis points over there. So 16% versus 20% in the telecom segment. Moving on to restaurants brand Asia, largely a good set of numbers. The revenues were up 29%. They managed to maintain the gross margins at 64%. The EBITDA was up by 35%. Again, margins of 5.3% versus 5.1%. And the PAT was down 2%. It was a loss of 80 crores versus a loss of 81 crores. And that is largely because of the losses in the Indonesia geography have widened. Moving on to Whirlpool, again a weak set of numbers over there. The revenue was down 2% at 1673 crores. They saw gross profit margin compression. It came in at 31.6% versus 32.3% same time last year. The EBITDA was down 28%. They have seen a significant margin compression, came in at 6.3% versus close to 9% same time last year. The management did say that the market growth in Q4 has been muted, especially in the refrigerators and the air conditioner segment. Apart from this, I'm also watching out for Vedant Fashion, as the promoter Ravi Modi Family Trust is going to sell 7% stake via OFS at a floor price of 1161 rupees per share, and they're going to sell an additional 2.8% stake via the green shoe option. Now, the OFS is set to open on May 18 for non-retail investors and May 19 for retail investors. Morgan Stanley has written on this, and they've said that the proposed OFS is primarily for purpose of meeting SEBI's minimum public shareholding norms. If completed, this would bring the promoter's stake down to 75% from currently close to 85%.
Okay, thanks a lot, Surabhi, and thanks to our entire team actually for joining in early this morning and helping us prep for the day. Here's a quick recap of our top stocks with positive news flow: Thermax, Honeywell Auto, Jindal Stainless, JK Tyres, Endurance Tech and Restaurants brand Asia. While stocks with negative news flow, there's REC, Whirlpool, RailTel and Vedant Fashions. But let's also try and get a handle on what's happening in the world of crude. Manisha Gupta joins in for a roundup of all the action there. Manisha, good morning. Seems like the debt ceiling issue is not a worry, at least for the US anymore. But you tell us, what is the impact that all of this has had in the world of crude?
Oh, well, yeah, thank you for that, Sonia. A lot of uncertainty, clearly, but overnight we saw the crude oil prices gain up by 2.5%. Some bit of a decline coming in right now as the markets are awaiting more developments on the U.S. Debt ceiling front, really. But there are various statements also coming in from banks and brokerages suggesting that the bottom in the crude oil prices may have been done, and we could be looking at further gains coming in for the crude oil prices. It has been a good overnight market for other commodities as well. The industrial metals have seen gains. The U.S. dollar index trading at a 6-week high clearly seems to be putting some pressure. But if you look at copper, zinc, aluminum, we've seen nearly 2 to 2.5% of gains come in the overnight markets.
All right. Thanks very much, Manisha, for that. So commodities in focus as always. Well, we'll take a very quick break here. We'll come back. Deepan Mehta of Elixir Equities will join in for some fundamental stock check. We'll also be joined by the management of Forgings to talk about their fourth quarter numbers. Fourth quarter earnings were subdued for the company. We talk about what FY24 will look like. Stay with us.
Welcome back to Bazaar Morning Call. Well, Dipan Mehta is joining in this morning to help us with, a couple of strategies on the market, on individual stocks. Dipan, hi, good morning. It's been so interesting, right? Just when we thought the market's going to hit those all-time highs, bang, you have this hurdle that's come in, this big roadblock. But be that as it may, I mean, so many companies and stocks are hitting fresh highs. And in that context, today is an important day because you have ITC, SBI, Bata, and a whole host of other earnings. What would your pick of the pack be ahead of numbers?
Sonia, good morning and thank you for having me on your show. You're right. I think this has been a pretty decent earnings season. And I was just reflecting that we entered the earnings season with so many fears around even software companies. But apart from, I think, Infosys, by and large, all the tech companies also came out with decent set of numbers and a few of them are hitting 52-week highs as well. So even the weak spots have turned out to be not so bad for the market. And as we are coming to the end of this earnings season, I think we have more ideas in terms of fresh investment rather than when we entered. And on the whole, I think looking forward to numbers coming in from SBI, looking at the way the other PSU banks have reported numbers, I think this one should be a blockbuster one as well. I just hope that the expectations have not been built into the price. And maybe you could have a pop once the numbers are released, which I'm pretty certain will be very decent.
Deepan, hi, good morning. Your thoughts on two specific names. One is LIC Housing, which sank yesterday. Of course, numbers came out. There were differing opinions. Morgan thought the numbers were great, and I think there was another one which was still quite downbeat in the name. And the other one is PVR Inox. A bit of a late reaction, but it was down about 5% yesterday. Numbers came out before. Your thoughts, these two names?
Well, good morning, Prashant. I think there are structural issues in both the companies you mentioned. See, LIC Housing Finance, being a pure play housing finance company, I think is facing intense competition from the banks, from the other more aggressive fintech companies, as well as other NBFCs as well. I think everybody knows that this is the best category to lend to. NPAs on the lower side, and the real challenge is just to get the right kind of borrower for the loans. And that is why I think LIC Housing Finance will find the going very difficult. So I'd be a bit circumspect. I know the stock is available at very attractive valuations, and you may have maybe 2-3 quarters. Sometimes the company does tend to surprise on the positive. But on a longer term basis, I think the real action in the NBFCs would be with MFIs. We saw results of Credit Access Grameen, or for that matter, full service NBFCs like say Bajaj Finance or a Cholamandalam, I think which have got many segments, not just housing. So that's how I'm trying to play the NBFC. Coming specific to PVR Inox, really, I think it's an eye-opener that the issues with content still linger around as well, even post-COVID. I think they had big challenges during COVID, but even after that, I think the box office collections are not that great. I suspect that there is really a change in the entertainment habits of the average, Generation Z or the millennial, the spenders. And maybe they are going more towards OTT platforms or gaming. And on the whole, I think maybe overall we should expect slower growth in box office collections. And that certainly is going to impact the prospects of the merged entity. No doubts, very strong position in the market and many positive factors. But if there is a structural change in the entertainment habits, that's something which the company cannot really control.
Hi, Dipan. Good morning. On Credit Access Grameen also, we got that point out from the management that they could be looking at selling 5 to around 6%. And with the kind of numbers they're getting, maybe demand will be quite rock solid for that as well. But Dipan, let's focus on the capital goods industrial space. You had Thermax as well as Honeywell Automation that came out with a set of numbers. Any view on both of these names?
Good morning, Nigel. Thermax, Honeywell, ABB, Siemens, I think all great stocks to own, but very expensive, I think. And end of the day, these are cyclical businesses. and I wouldn't want to pay a very high P multiple. The strategy for these companies has to be to buy when the cycle is down and when they are reporting lower and lower profits, because sometimes, some point of time, these profits also will start to look up as the capex spending picks up. So, I mean, if you're holding these stocks, it's great, enjoy the run while they're going up. But at these levels, I wouldn't want to enter into these 3-4 companies, which are fantastic plays on the capex upcycle, but very expensive in terms of price to earnings multiple, and long-term sustainability of growing at 15-17% is still in a bit of a doubt.
Earlier, Dipan, you were mentioning about this online gaming, right? Our colleague Mangalam put out this very interesting video on the Indian consumption space. And in that, it was fascinating to see that online shopping, there are about 150 million people. But online gaming, 450 million people consume online gaming.
Yeah, that's like Nazara. We only have Nazara too.
You would think it would be the other way around, right? Because a lot of us just shop and don't game, perhaps, but we don't know what's happening in the rest of the country. It's a completely different picture. So I take your point about names like Nazara Tech. Okay, I'll come back to you in a bit because I do want your thoughts on some of these auto ancillary companies which have reported really good set of numbers. Forgings is the first corporate we are interacting with. Good set of numbers coming through. The top line growth was quite strong. In fact, they ended FY23 with almost a 29% revenue growth, while the margins also jumped by about 110 basis points in Q4. Vidya Shankar Krishnan, who is the Vice Chairman and Managing Director at Forgings, joins us now to discuss more on their Q4 performance. Mr. Krishnan, good morning and congratulations on a strong set of numbers. I just wanted to ask you about what the outlook is for FY24. Because, you know, you ended FY23 with almost a 29% growth on the top line. Is this something that you can replicate in the next year? And what do you think the big triggers would be for growth?
We have sold about 72,000 tons last year, and we expect the sales to go around 90,000 to 95,000 tons in this year. So that would represent another 20 to 25% jump.
All right. Hi, good morning, Mr. Krishnan, and good to speak to you. So, you know, you had spoken about 90,000 to around 100,000 and you're sticking to that guidance. What does this mean in terms of revenues, you know, from around this 1,450 crores on, and also margins? You know, the numbers look good on a year-on-year basis, but on a sequential basis, margins came off a little bit. So let's talk about the year on the whole. What should the margin picture look like? And in that sort of a backdrop, what will, you know, machine as a percentage of your total business contribute?
The year ahead, we expect to clock around 1,800 to 2,000. Those earlier numbers still hold and or well hold. And we expect similar EBITDA levels as we go forward. The
That's
machining
90.
percentage has gone up to 60% from as low as 20-25% a few years back. So our machining percentage is now close to 60. We expect it to be between 60 and 65 in the years to come.
Okay. So you said 1,800 to 2,000. What is that number?
Sorry, there's some cross talk.
1,800. Sorry, 1,800 to 2,000. That is revenues.
Yes, that's right.
Okay. Compared to 1,450 crores
1,800 to 2,000 crores on the revenue side, and margins in the region of 19%.
Okay. How is the sort of US market, export market really going to pan out with what's happening there? I mean, do you have what the numbers that you're giving us, are they locked in terms of the visibility with regards to orders which have come in, etc.? Or will you have to win these to get to these numbers? Because the outlook is worsening by many, as seen by many commentators, etc. Go on.
Yeah, definitely the export outlook is not so great. But fortunately for Forgings, we have moved over to focusing a lot on the domestic market. And therefore, our concern is more about the Indian market, should be more about the Indian market than the export market. And that doesn't mean that we have abandoned exports as a strategy or anything. Just that the focus is more on the domestic side. So we should be a little bit inured to the changes happening abroad. But as we all know, no company, no organization, no country is living in isolation. Okay, so moribund markets in Europe and in the US, but I don't see too much of a fall in the months to come. The sector that we serve is largely the CV market in both these CV segment in these areas, in these geographies. So we expect these markets to be at least holding their levels.
Okay. So 20 to 25% growth is what you're looking at in FY24. But earlier you had said that you have a target of 5,000 crores of revenues by FY27. Is that a target that you still hold? And how do you plan to achieve that? I mean, 80% of your business comes from the commercial vehicle market. So do you think growth is enough to achieve that kind of a target by FY27?
Sonia, we never talked about 5,000 crores by FY27. We talked about 2,000 to 2,500 crores by FY25, 26, and we said we'll take it from there on. So this itself is a big jump, and we need to strategize to move forward. And I don't remember having ever stated anywhere near 5,000.
Okay. So 2,000 to 2,500 crores. All right. We got that target. I wanted to understand from you on what the debt figure is. I think as at the end of FY23, I have a debt figure of about 550 crores. Where does it stand at right now by the end of FY24? And any plans to reduce the debt anytime soon?
We are planning to reduce long-term debt, and not just planning, we are executing the thing of repaying long-term debt. But as we go on, we will also see that we'll be putting in another 500 crores in the business this year. So we may add about 200 crores of long-term debt at the end of the year.
So the debt goes up to 750 crores then for the year?
Sorry, Nigel?
The total debt number, Sonia mentioned it was 550 crores at the end of last year. So given that you have some spend and it could go up by 200 crores, the debt number by the end of FY24 should be around 750 crores?
Yes, around 750. That's right.
Okay.
750 crores of debt. All right. Thanks a lot for joining in. Appreciate your thoughts to give us all of these figures, and all the best in the year to come. It's a brand new year. You've ended FY23 well. Hopefully, the next one will be a better one for you. Okay, that's Forging. I do want to get some thoughts in from Dipan, but what I'll do is I'll just take a quick commercial break. On the other side of the break, we'll also try and get in some views on the market. Shrikant Chauhan and Sudarshan Sukhani will join in for some technical trades. Stay with us.
Okay, welcome back. The SGX Nifty will come up on your screen. It's indicating a slightly higher start. The handoff has been positive. So can we shrug off some of the weakness, some of the hesitation over the last couple of days and move up a little bit? That's the question with these gains last. Anuj is here with his perspective. Anuj, morning.
Morning, Prashant. I have a bigger question actually is, whether the market has turned or not. It's the first back-to-back down sessions that we have on the Nifty since 18th of April. Today, of course, is 18th of May, so almost dates back to a month. And the Bank Nifty also, though it had a nice recovery in the last hour and recovered almost half of the losses, but still closed below crucial support zone of 43,800. My sense is that, the screen is showing that maybe a test of the 20-day exponential moving average is now possible on Nifty and Bank Nifty. And that gets confirmed if today's gap up gets sold into. That confirms the texture. So let's see. I think today's closing is extremely important because we have, also if you see the second half of earnings season, it's throwing up some laggards like Whirlpool. Weekly expiry as well, and two big numbers, ITC and SBI. So that's something to keep an eye on. If you watch out for the Nifty action, I think 18,200 and 250 calls, that's where you had the highest open interest build-up yesterday. And look at that premium collapse and open interest build-up. And that's where I believe the resistance is 18,241 to 18,270, with big resistance placed at 18,309, which is yesterday's high. First support zone comes in, of course, at 18,115, which is yesterday's low. And I think the all-important support is at 18,050, which is the 20-day exponential moving average. On the Bank Nifty, almost similar sort of profile, 43,600 and 43,800 calls, so huge open interest build-up. So from the options data, the resistance zone today is 43,812 to 43,900, and big resistance zone is 43,993, which is, of course, yesterday's high. First support zone at 43,446, yesterday's low, which is also similar to the support zone provided by the options data. But let's see. I think if gap up gets sold into today, it confirms that perhaps the market's texture is changing a bit. Also, the FI buying has reduced. That's also telling you that at higher level, obviously, there's some resistance to buy.
All right. Thanks, Anuj, for that. So, interesting test case today with, can the market hold on? Global cues are positive, and if markets are not able to hold on, it'll tell us something that something is troubling internally. The point about flows, Deepan is still with us, is interesting. So FI flow number has been strong, maybe coming off a little bit, but watch for the mutual fund flow number as well. And generally the feedback from the industry is that even this month, in the month of May, numbers are weak. Inflows that mutual funds are themselves receiving. Last month number was a big drop, and this month also MF flows so far, maybe it picks up in the second half of the month, but so far they are quite weak. So we'll watch the space. Deepan, just a quick view on these, the EMS companies, so as to speak, manufacturing, contract manufacturing, electronic contract manufacturing companies. Amber, Sirma yesterday, there was Keynes, they were all big gainers. Do you like any of them, own any of them?
Yeah, Prashant, I think we like Amber Industries a lot. Disclosure that we and our clients are invested in it. And I think when you compare the risk-return profile, that seems to be one of the stocks which can still outperform. The issue with the other companies you name, especially Dixon, is the valuation. I think the opportunity has captured the imagination and attention of a lot of investors, but then these stocks are very richly valued. And end of the day, you have to keep a track of the value addition, and movements in raw material prices do impact their operating profit margins.
Okay, any thoughts on Forging? The conversation that we just had with the management, they seem very optimistic on the way forward, but they also spoke about how exports are under pressure. So, a couple of these other names like Bharat Forge, etc., could be impacted. But in this entire space, anything you like, Dipan?
Sonia, when it comes to auto ancillary, we are very positive, but want to avoid anything which goes in the engines. And our focus is more on whatever you see within a passenger vehicle car. It could be infotainment, could be security, airbags, seats, interiors, because I think that's not going to change even when you have EVs coming into play over here. But the internal combustion engine and the parts going into that certainly will be under threat. And you won't see this, it won't be visible for many years, but the markets will just start to give it a lower and lower price to earnings multiple.
Okay, all right, Dipan, we have a couple of more questions for you. Request you to stay with us. For the time being, let's welcome our technical experts. We have Sudarshan Sukhani as well as Shrikant Chavan who join us on the show. Good morning, gentlemen. Thanks so much for joining in. Well, Sudarshan, how would you approach trade? Last couple of days, the bears have come up on top. Yesterday, barring the last 45 minutes or so, the bears pretty much dominated the session. Your view on the index first?
Good morning. See, my view is a little different. When markets have strong rallies, they invariably have corrections. So I do not think that the correction represents a bear market or even the presence of a bear, say, trader. It's just a normal dip after a big rally. Yesterday, the dip was bought into, so I would be upbeat today. Yesterday, I had said that the markets are in a range. Let's avoid it, buy only if it goes below 18,200 and so on. It went below 18,200 and bounced from there. And the same thing has happened in the US markets overnight. So today I'm upbeat on the market. Now we'll see whether it is able to cross and make new highs. I can't predict that. But at least with 18,100 as stop, the trade today is to go long.
The trade is to go long, all right. Any individual stocks that you're looking at this morning, Sudarshan, what would they be?
Well, yes, Chambal Fertilizers is a buying opportunity. Earlier, I had explained it's given a big, large pattern, a bullish pattern that continues, small corrections, then resumption of up move, buy with a stop under 290. Indiabulls Housing Finance is an intraday short. It's a very choppy market action that we are seeing on the chart. Short with a stop above 115. Remember, it's only intraday. Similarly, Atul is an intraday short. I'm talking about intraday shorts because I'm assuming traders will be long in the indices. So there's some kind of a little hedges here. Atul is an intraday short with a stop above 68.35. And finally, BHEL, which has started a rally, is a buying opportunity. Keep it positional, stop under 79.
Okay, all right. Shrikant is with us as well. Shrikant, good morning. What's your review? The Nifty index after the last couple of days of a fall, would you buy? Presumably, we start 30, 40 points higher. Would you be comfortable buying?
Good morning, Prashant. No, I think see, like the way there is like sell-off in last 2 days. Very first 18,250, 18,300 going to act as resistance for the market because the sell-off was much sharper than the expectations. Also, 5 days simple moving average acted as major support in the past whenever there was like fall in the market. So now it is going to act as resistance. So close to those levels, I'm just close to in fact 18,300 levels. We should look for reducing some positions. But yes, in case if we see furthermore decline in the market and market falls to 18,050 levels, then there we should be buyer in the market because there the market is having support of number of averages like 20-day simple moving average on which just now Anuj mentioned. So there the market is having excellent support. But at these levels, if there is any higher opening, we should look for avoiding at least buying index.
Okay, avoid buying the index. Any individual stocks that you like today, Shrikant?
Yeah, I think in that space, all these bank stocks are really doing well. And whenever there is like a recovery in the market, we saw that recovery backed by all these bank stocks. And it is also because of FIS Bank, which is consistently going on. So we are expecting Bank of Baroda to do well, which is currently around some 185, 186. There we are expecting stock to move towards 200 levels. So it's a buy at current level with a stop loss around 180. We also like State Bank, which is around 586, 587. Keep a stop loss at 574 for the target of 600, 610. And we are specifically bearish on metal stocks because there we are seeing lower top, lower bottom series. So in that space, Tata still looks weak. There we should be seller with a target of 102, 100 on the downside. Currently it is around 107, 106. With a stop loss of 109, we should look for creating short positions on Tata Steel.
Okay, all right. Thanks a lot for that, gentlemen. Well, Deepan Mehta is still with us. Deepan, I want to ask you your view on the OMCs. You know, valuation-wise, they're fitting in perfectly. If I look at the cash flows to MCAP as well, very, very good. But clearly, the street is a little bit cautious. I don't know, because we're heading into an election year or something like that. But how would you approach some of these names?
See, I've never been a great fan of the PSU companies and especially the oil marketing companies, but I do feel that this time around, you may see a nice trading rally in the oil marketing companies. Across the board, PSU stocks have done well, right from defense stocks, banks, the financial services, in railway stocks and whatnot. And the last segment within the PSU is the oil marketing companies, which have not done well. But with oil at the levels at which it is, I think they will enjoy very good marketing margins, and that has always been a concern. And looking at the numbers and the way the marketing margins have shaped up, I feel that there's definitely a strong chance that these stocks for the next 2-3 months, maybe next quarter, can give very reasonable returns. Earnings yield, dividend yield is excellent, and stocks certainly are available at very cheap price to earnings multiple, which can easily get re-rated upwards.
Okay, all right. Well, Deepan, just stay on. We'll take a quick commercial break and come back. We also have big earnings today. ITC reports its numbers, so we'll have Abneesh Roy of Nuvama Institutional Equities to help us through those earnings. Also, to talk about the FMCG sector. Do stay tuned in for that.